Good morning, a video morning brief of the U.S. stock market. It is Friday, August 16th, 7:45 a.m. Eastern Time. I'm Rich Paz for Critical Point. On the news front, on the political side, Harris' economic plan features new tax cuts, price caps, and then housing incentives here. Some of this bothers me. It's still old-fashioned types economics and same old of both liberals and conservatives that we've seen in a while. But there's a twist of something new. And there are callings that Harris needs to be a little more aggressive to break away from the Biden side of things. Wall Street, of course, is going to consider this now all the way into whoever's elected and shortly after, in the sense of what policies will come to fruition. Okay, we then have Morgan Stanley's Mr. Simon. I think it's actually Slimon. I don't know, I'm not familiar with that person and track record, but calling for 6,000 in the S&P 500 or close to it, near it, by the end of the year. And I agree with that. I have new upside objectives, 6,100s to 6,300s, probably for early next year. Okay, so it could be that good. Most of the earnings have been useful, helpful for the bulls. Okay, and most of the economic news still looks good. I see Bayer shares soaring 12% after key U.S. legal win on some of their chemicals and whatnot. Any rate, it is Friday. We should anticipate a little profit taking, and overnight the futures are off 6 3/4 here for the S&P 500. All right, let's go to the 6-hour chart here, do some analysis, and what we have is good chance of a level 4 top was placed overnight for the futures market. The prior level 4 top was on the 14th, but we have a difference of opinion. When did it occur during the 14th? Okay. And that could make a difference that if it came in later than what we're currently using, but allowed, and still on the 14th, it's possible the market needs to bounce today to put in that level 4, then down today into Monday. Otherwise, the best forecast this morning is they're probably willing to take some profits today. They're probably willing. It may well be a quiet market, but to the downside is people just get out for the weekend. The bulls have some partying to do and some celebrations over the weekend, and the bears need to go someplace and get some relaxation or something. Any rate, the next level 4 bottom, interesting enough, can show up today, but I'm a little suspicious it's Sunday night for the futures, but maybe today for the cash, or that it's the bottom comes in early Monday for both cash and futures. We don't know. Currently, it looks like there's probably very little downside, no reason to really sell here, but I have to warn you, this level 4 top that was likely placed overnight for for futures. Cash is a little questionable. If the futures go down and the cash open down, just keep on going down, then that means they topped yesterday. That's questionable for cash. So I got a feeling there's a little stability today too. Somebody's going to buy something for a little while today. But what we have to watch out for is a level 4 top today is the earliest allowed, even though I showed you it was earlier than that, but as of updated with the latest data and the latest pricing performance, this is the earliest allowed for a level 3 top relative to this level 4. Let me rephrase that. I said earliest. I was thinking in terms of this trend, how long it could be. Reality is, for the business cycle, it's now getting late, okay? We're kind of like maybe 4, let's see, how would I put it? 5/6 through completion for level 3. What that's telling me is we could get a level 4 pullback today, tomorrow, Monday, back up on Tuesday, Wednesday, should ideally be the next level 4 top. That's the latest allowed for level 3. So if you feel like this is strong enough today, might as well be patient in next week. But you want to sell level 3, you want to wait till about Tuesday, Wednesday. You want a backup plan that if it goes down a certain amount, that you just go ahead and do it, because we don't know for sure if it'll stay up to Tuesday, Wednesday or not. It's met everything here. My gut feeling is, even though it hasn't moved enough and don't have any bearish news that I can think of, my gut feeling is it's topping for level 3. So this means next week we should have some downside, and it's probably going to bottom Wednesday of next week, and later could even be into the following week, early that following week. but more likely next week. I think we've got about a 2 to 3 day setback coming when we look out to next week. And that doesn't mean down for the full 2 to 3 days. It doesn't mean that it's going to be down all that much. I'm not convinced it will be down all that much. But there are bears out there who think this is nothing but a large knee-jerk reaction, should be sold. And then there's some bulls who have kind of left us here a little bit. They are thinking neutral for quite a while. Inside of neutral, I suspect they are trying to sell this. And that's long-term bulls. So we do have to be concerned something more important can occur here to the downside. So at any rate, yes, it's getting late. I said early, wrong statement. It should be down next week into a level 3. This red line gives us the time frame of when to expect a bottom. This red line was the time frame when to expect a top. And we can see how we can allow one more level 4 upswing to take it higher than this, then down for the level 3. Versus it may be over and done with right here, right now. If you're a level 3 trader, you can probe the downside, see what you get, okay? But right at the moment, as this morning, there's really no evidence other than this indicator is turning to the sell side. It is overbought. It had some false sell signals. The probability is moving higher that, yes, this will probably top for level 3. For those of you who like to be a little late, show some sign, a little more between timing and trend following, I would say a down day is probably a sign of a level 3 top. I won't alert you. You just alert yourself. Level 3 top, take a chance on it, okay? Now, for pure trend following, you'd probably have to let it come down quite a bit. And for level 3 traders, I think you're not going to be pleased with normal trend following. It might come down to quite a bit. You sell and you find out there's just nothing there, okay? But it depends how you trade, how fast you watch intraday things, and what you feel is a trend. Because we do have a gap down here at 53.60 on the 60-minute chart for the SP 500 cash. That's the most downside I see at the moment for the level 3 down move by next week that may begin today. We also have a gap created on August 15th. That's wide enough to take serious. I think that's your first downside target for a level 3. It may be all we're going to get if it's kind of like a dud level 3 downtrend, and it may be. But at least for level 4 traders, that's a more serious target to consider. That it can move back to 54.80, down to 54.60, 54.50, into the 54.90s, things like that. And so I think trade below 55.32.53, you need to start considering its top for level 4, and to get even more serious about level 4 and a potential level 3 top if it trades below 55.28.05. I think you got to give the bears a chance here. It's probably time to back it off. All right, now let's go to the daily chart. See if we can get any additional information. And yes, we have this large gap. It's sticking out there like a sore thumb. It will be a downside target someday. Since we know we're so close to a level 3 pullback looking out to next week, it's probably coming soon, okay? So therefore, a trade below yesterday's low of 5501.13 is filling the gap. Also a bit of evidence of probably a level 3 top. It can pull it back to the 20-day moving average. They can pull it back, or that's the 50. They can pull it back to the 20-day moving average below the 50. They can pull it back to this old gap. They could even pull it all the way back to the 100-day moving average at about 53.22. Again, that I throw that in the pile of probably too low, probably unlikely, but also chance for worst case scenarios to the downside. All right. Now, the market needs to trade above 55.65.66. That'll wipe out the decline after the Fed Reserve and with the Japan carry trade, their 1987 U.S. lookalike crashing moment. I think that's going to make some people even more bulled up. They're going to assume it's going back to this gap near the record high, if not to a record high that was placed July 16th at 5669.65. All right. Now, what I want to make sure you understand, we probably are going to have upside objectives as 6100s to 6300s when it trades to a record high. And it's not if, in my opinion, but when, okay? Now we'll go to the SP 500 futures, and you can see it's starting to move lower as though it's topping. That's not much of a follow-through spike there either. I would prefer a little more upside. And on the cash side, I prefer it to kind of at least hesitate sometime today, the first half today, and then maybe lower. later in the day. Give it a little time there to put in a level 4 top where it just kind of fizzles out. It just doesn't want to go up. And I'm sorry I didn't put the time frame out in here and I didn't put the label. But next week we anticipate a level 3 bottom, and it's probably any kind of a percent retracement here you want to do. You can run Fibonacci, you can use the 50% rule, and I've given you all the other targets and the gaps and everything that we have for the downside. But that's what we're looking for. I think it's probably going to respect the August 1st high, the Federal Reserve high, and all that. And I think it's ready to move down, okay? And then we have the Dow Jones Industrials here. For those of you who follow it, very impressive update. Still due for a level 3 top today, but I'm thinking it's probably the latest. I don't think it can really go higher in the next week, but I already said it could to Tuesday or Wednesday, so we probably should leave the door open for the Dow Jones. But that's a big enough gap. Somebody's going to use that as a downside target after someone sells first. Okay, for the moment, they're questioning whether they want to use it, but it is overbought enough. It's probably coming down, okay? Then if we go to the NASDAQ futures daily and bumping up against one of the moving averages here, it's overbought. It's trying to roll over for a sell signal. It's due for level 3 top. It's near prior resistance, meaning a price level that they started selling and they stopped buying. It's near the Federal Reserve high. That's impressive that in 1 week, the market totally wiped out the prior week's collapsing moment that was related to a 1987 style U.S. crash for Japan because of their carry trade. Something global, something financially global, something big. All right, and turned around and rejected the selling off the Federal Reserve, of the disappointment that the Federal Reserve wasn't a little more pushy aggressive towards the idea of dropping interest rates. And there was fear last week of, we're on our way to recession. The Fed Reserve's not moving fast enough. This week, they just did an abrupt turnaround and said, nah, we'll go with the bull side of things. All right, let's go to the weekly chart. S&P 500 here, above the 5-week average. That's far enough above. If they hit it hard and put it back below the 5-week average by the close of the day, not a good sign. We'll probably see follow-through selling next week, which we know it should anyways, but it might be far more dramatic, and we might have problems the rest of the month into the late to end of the month into September of downside. But right at the moment, this is looking so impressive to me that I realize I'm going through some people I've respected and that I've even personally met many years ago. There's even a technical person, Katie Stockton, who is now neutral to market for some time. I think Katie's going to be wrong, okay? I think others are going to be wrong. I think this market's going to record high by November, maybe a lot sooner, like in the next few weeks. This looks that strong, like it's a rocket ship, okay? Sometimes you snap something, you hit something so hard in one direction, and it's like it just comes right back at you and will take your head off, okay? How many times have you done that with a ball? Slam it up against the wall and it come back faster than you thought, and it's going to get you. Or your opponent in racquetball just beams you, okay? Okay? All right, so it's that wild, all right? It is moving back above our fair valuation. It was too low below the fair valuation, so all of this proves we're on the right track of valuation, even though we couldn't predict just how, from that valuation, just how low it would go to stop. We had to use other techniques. This weekly indicator looking very nice. It can close up for a buy signal off an oversold condition heading to mid-range, suggesting and it's wide enough spread to start thinking that what it's saying is the market can go up the next 1 to 3 weeks. Well, we want that. It's part of the forecast, and I'm all saying that's what should occur for the best forecast. But the model is warning there's other alternate forecasts where this could be a giant knee-jerk reaction, and it just comes down, down, down. My guess, if it's coming down, it's actually coming down slowly. That we're going to get bits and pieces of more bearish news, some worries. I don't think it's going to be hammered, but it may. And the only thing I can think of a hammering is if something went wrong with the Japan carry trade. But maybe there's some other country can do it, but I don't see a problem in this country of something slamming us. I don't see the fundamental news lineup of really doing it. So I think this market is screaming higher right into September for level 2 top. May not even pull back into the level 2 bottom as it should or is being forecast to. And then just slamming up against in November when it probably will, like the election even. My guess, if Harris is elected, they'll be bullish in November. I don't think they're going to be bullish in November for Trump. They may be bullish to very bullish later under Trump, but we'll see. Any rate, I think, again, and even for the futures, we have 6100s to 5300s for upside, but we have to take out the record high. So for the nearby futures, 5669.65 currently off the E-mini S&P 500 September futures. But this looks constructive, looks bullish. I got to go with it. I'm sorry, that was the cash. My brain's not quite on par here. These are cash targets. I'm sorry. For some reason, I thought it was on the futures. The future chart looks fine. The only reason to really look at the futures these days, I've been using, as you can tell, more of the cash in terms of explanation, but we use the futures equally, if not even more, in actual analysis. The futures are back above their 5-week average and above the 5-week average of the open. The close is more popular, but I like to see it above the 2, and they're starting to turn. So in the next few weeks, if they turn up, that'll be a late lagging indicator that ought to be bullish as long as the market stays above it and closes above it on a weekly basis. This indicator also looks positive. I think it's up and away, folks. I think we got a record high coming. I think this is going to be much better. Now, I have to warn you, Jeffrey Hirsch over at the Stock Market Traders Almanac made comments that the beginning of August and towards the end of August can be negative to bearish, to even ugly, and in the middle of August can actually be up. So I think he was warning this might be short-lived. This might be a knee-jerk reaction up. And even if it doesn't come down much, he was kind of hinting, hey, September normally is not necessarily a great month. Keep in mind, the old days, we always assumed September and October, the worst months of the year. These days, we have to assume August to October is the worst months of the year. But I think inside that, it's still September, October. I think this market's going higher into September. If the Fed does not lower its rate, we're going to see seasonal statistics of getting hammered into October. If they lower their rate, I think we're going to find the seasonal won't work that well in October. I think it'll still come down some, but and may come down towards the end of October to start of November for preparation of the election. But overall, I think it's going to be higher in November. Then we'll get some more problems into early next year. Then I'm less concerned of bearish surprises here. I think we got to be bullish for next year on into the following year, and very, very bullish. So that's my stance. We're going higher to 6,100 to 6,300s when we take out the current record high. In the meantime, we are vulnerable to setbacks into September, stalling out, doing nothing, scary moments, messiness. But in general, I think it's probably going to have somewhat of a bullish bias. The VIX has truly turned around. Okay, now we need to take a look at the equal weighted index. It's going to be more important in our modeling than ever. And I like that price action, okay? They're buying across the board stocks. The breadth still doesn't look that great. The percent stocks over the 200-day average doesn't look that great, but it's not a concern for the model right now. What we really want to do is make sure this index holds up fairly well. I don't care if it drags its feet relative to the major indexes like the Dow Jones, the NASDAQ, the S&P 500, and this is the S&P 500 equal weighted, by the way. That's fine. I can deal and work with that, okay? Eventually, it will move higher and be quite bullish. I think after the election, more so probably after January 1. And then I think in late 2025, it's going to do something different. It's not going to be so dragging its feet like it has in the last 2 decades. It could be very, very good. So keep an eye on those small cap stocks, the mid caps. You can go shopping there. I think you're going to do very, very well in the next year or two. What's going to happen is this economy is shifting gears to be more oriented towards the middle class, the poor, the smaller businesses, the mid-sized businesses, less of the big business. But the big business will still do fine, and we're going to have even a better economy. The rich won't do so well, but they'll do fine for the moment. Any kind of war on the rich is still years away here, even if Harris gets elected. Unless they also overtake the Congress as well, then they might be able to move a little faster. At any rate, this is all looking good, looking constructive. So how about the interest rate environment here? So what we have is The interest rates should be higher in September, but I think it's going to barely pick its head up as the bond market gambles the Fed Reserve will lower interest rates in late September, okay? And then they want to be long-term bearish in the next year, all right? But I think the normal business of the bond market suggests it can pick its head up here, move a little higher. They may even want some safety the closer we get to the Fed Reserve, and put a little cushion in there just in case the Fed Reserve does not lower rates. Some of them will then already be on the right track and ahead of the game. And it is oversold enough here. So therefore, the bond market in terms of price is overbought enough. It's time for a little profit taking in bonds, I suspect. A little less demand. But I don't see a reason to turn bearish bonds. I think the Fed Reserve will lower its rates, but we could get some spikes higher here to give us some problems in the stock market. Right at the moment, it looks like the stock market really has gone the longest number of days in some time of not really paying attention to interest rates. But interest rates have also been a little bit quiet last week and this week. Even with this financial global problems, it was rather interesting. It just kind of sat there and said, let's watch. Well, you can see it also lowered interest rates as it was going into that. So the bond market was probably picking up on some of that risk and that problems. So I have to be bullish interest rates, bearish bonds, but I really don't want to be, and I don't think it's going to be that big of a deal or a change here to give us problems of where we're going in terms of chance for the stock market to rally into September. Now let's go to the dollar index, and a bit of buoyancy is a time of creating a level 2 bottom, moving higher into a level 1 top. All right, and I don't see it moving high enough to be a bearish factor. And I think it's long-term bearish in the next year, right along with the U.S. and global rates, okay? But I don't know. I'm not really extremely bearish by no means. I don't know as it's really going down a lot and all the way into next year. And also don't see it going up. So I don't think it's a big factor for the stock market nor the economy. But I would favor a lower dollar to help global and U.S. economies. Now, as we go to the gold market, I think it's going higher into September, perhaps into October, perhaps even higher into early next year. But it can still slip on a little bit here in the next couple of weeks for level 2 bottom. But basically, I think it's going higher. And that's a level 3 top, level 3 bottom. Level 3 top may occur today, but I'm guessing it's going to punch through that next week, then pull back next week for a level 3. Might be in line with the stock market. Bitcoin ought to pull back some more here, but I think it's just going to kind of muddle around. I'll go slightly bearish here on it. I am long-term bearish on the minor long-term trend into next year, but I am major long-term bullish later this decade, something that's going on for this decade. It's time to chill out, correct a little bit. Crude oil, big negative weekly reversal here. Once again, shows signs that we have a problem here of just can't get traction for anything long term. I don't think it's going to accomplish much of anything to the upside till after the first of the year when they prepare for the next driving season. There's plenty of oil out there. They spike it when they get worried over what's going on in the Middle East, and then they realize, no, it still doesn't look like it's a threat to the major oil fields of the Middle East, and so they go right back to selling. And really, the world's got plenty of oil. The U.S. has plenty of oil. We have record production of oil, okay? And there's just no reason to accomplish much. And this is actually a good thing for the economy and the stock market. And then this is the ratio of NASDAQ to SP500. I'm convinced it's moving higher into September. That means you may be able to make more money out of the NASDAQ and maybe NVIDIA and Mag 7 than you will the other indices and the other stocks in those equal weighted indexes. So it might be the Mag 7 now moves higher faster than the 493 stocks in the SP 500, but that doesn't mean a reason to sell those 493 stocks. I think they're going higher to much higher in the next couple of years. And I think some people that bought recently with that great rotation and then the wall of money that came in this summer, they're not going to they might let go a little bit of it at times, but they'll also buy it back and buy more still down the road. And they bought themselves a slug of it. They're going to hang on for long-term dear life is their attitude, okay? This is the ratio of Russell 2000, the S&P 500. It's weaker, so it's telling you they're not buying. They are selling the Russell 2000, or at least not buying it as fast as they're buying the S&P 500. Again, that's okay. That ratio, I think it may muddle around the next year or two, but yet you'll still see those stocks higher, but you may see that ratio perk up at times, and normally it does perk up near the end of a year to the start of the next year. So there could still be a very nice round of buying coming yet in that, and I'm not too concerned. I think those stocks will do very well the next year or two. All right, to wrap things up, let's go with the intraday interest rates here. 10-year Treasury note futures. That is a level 4 top. It should not be a level 3, but they're knocking rates down well. And after I get off here, I have to check and see, did I miss out any fresh news here? But I think you want to look for a level 4 bottom today to Monday to Sunday night if you're looking at futures, for a level 4 bottom, because it's suggesting this should be the level 3 top. And I called a level 3 bottom there, and then I realized that I made a mistake. The model was saying, no, it really shouldn't be there. So I think this makes sense. They're pulling it down in a level 3 bottom that's probably going to occur next week. It might possibly occur today, and yet it should be for a top next week as well. So I think what it's going to do is limited downside, limited upside. It's kind of going to move sideways into next week. I think that allows the stock market to at least pop a little higher into early next week, then down. But it may be they are over and done with, and it's done today. And my gut feeling is it probably is done today. But my thoughts are, if we can keep the interest rates doing a whole lot of nothing, down a little, up a little, that's probably going to make it easier for the stock market not to go down much next week. All right. So again, to reiterate here, we'll go to the SP 500 cash and consider that we have this gap here. That's probably maximum downside next week, and I say it won't even come anywhere near it. We can have this gap created yesterday, and yes, it should come down to that for this level 3. And I think if you see it trading below the 53 or 5528.05, I might not be looking at the right thing here. And you can also use 5532.53. And also, if it looks like it's going to be a down day or it finishes a down day, assume the level 3 is down, more downside next week. Assume it's going to fill this gap, so it's probably going back to 54.50. That may be all we get. It may go a little bit below, but not a little bit lower, but not actually come down and fill this gap. That's okay if it does, but I'm guessing it'll stay above it and somewhere's in this area. Okay. And then I think it just goes higher later. Maybe I'll be wrong. Maybe everything's going to start to fall apart. I mean, it's going to be very sloppy into September. But my guess is this market's moving higher into September. Okay. And again, take out that record high. I'm going to be very confident we're going to see prices over 6,000 early next year. And we have someone over at Morgan Stanley thinking it can be near 6,000 by the end of this year. That actually falls in line with how I visualize this trend. Now, it would also be fascinating if it can have a bullish posture all the way in November, very little selling by February, and then bullish again. Might look much like 1996, and then we can just be bullish into 2026, just as it was bullish from 96 into 98. This could also be very much like 1926 when it was bullish into 1929. We've got plenty of more upside for years to come here, but along the way there's going to be some large setbacks at times, anywhere from a few percent to 20%. But right at the moment, it looks like we've met what I wanted for a -7, -11% for the overall stock market. I think it's normal standard operating procedure. I think the economy's hanging in there. I think people are feeling as though, all right, less risk than last week for a recession. Economy's still growing. Good chance it's not growing too fast for the Fed Reserve. Good chance this inflation's coming down even a faster pace. Fed Reserve ought to lower in September. We might as well stay on the buy side until we get to that Fed Reserve report, unless someone else hands us something else that we have to get scared about around the world or in this country. Otherwise, in other words, standard operating procedure in a long-term bull market. Have a great weekend, great day. Thank you. I'm very proud of this modeling. I hope you've done well and kept up with it. I'm looking at my counts, and I'm very proud of the performance. Thank you, and please get me some more business. Thank you.